What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. You may notice a weird addition to our watch list this week. It's BTC_LO. There's some text hidden underneath there that'll explain what that is, and I'll show it to you in just a moment. Very, very interesting piece of information that'll give us. But for now, Bitcoin daily time frame is up first on the chopping block. What do we see from a price action and structural perspective? If you recall last week's episode, the title was Be Cautious of the Bull Trap. And I had no idea that obviously CPI was going to be as bad as it was. I did not know that this would produce a 100% retracement, but we were cautious of the highs, especially coming into that 21.6 last week. You can go and listen to that episode if you're curious for the reasons why. But going forward, what do we do about this massive reversal now that has brought us right back down to the bottom end of range number 2 or 1, depending on how you count it, right? We've had these two blocks. We've been talking about them for quite some time. I didn't believe that we would firmly rotate into block number 2, we'll call it for now, up here. So now that we're at the low end of block number 1 again, what is the look going forward into this upcoming week? Well, given that we have a 100% retracement, it would not strike me as being odd to see a little bit of a dead cat bounce here off of either the level we're sitting on right now or 18.6. So as this video comes out, we'll see if this produces a hammer candle. If we take out the top of it, look for a little bit of a dead cat bounce, but I would not say this is anything significant to the upside. I'm just saying do not short this yet on a big breakdown if you're looking for the breakdown trade. I would also say this is not a long. We're not looking for this to do something like this all of a sudden if a small dead cat bounce is produced off of this 19, let's just call it 19.6 level, okay? So that is not the case. Just be prepared for a little bit of inventory correction. And when and if this produces a lower high from here, ideally underneath this set of lows from in here, which was also resistance there, $20,725. If we get a lower high underneath that, a clear boom, boom, from here to here, there's your lower high, then the gates are open for a short trade here inside of Bitcoin. Why am I, harping on the short side here? Well, not only do we have longs trapped here, if they haven't closed out already, I guarantee you they will close out underneath. Maybe I shouldn't say guarantee. That's a very, very strong word, especially when we're talking about the market. But I would say with a high amount of confidence that they will be feeling lots and lots of pain underneath 18.6. And 18.6 is the obvious place to place a stop loss if you are a big swing trader looking for this move to ultimately have carried you much higher. Why can we say that? Well, let's go to the weekly time frame and consult the big dogs here. So we know that this is possibly a bear flag. If you are bullish and you were looking for the reversal off of that low, then your stop loss just goes right underneath the bear flag. So it would make sense that if we violate that, all of those people who are feeling pain stop out and we get a big stop run, a big flush to the downside. Now you might be saying, what are the downside targets underneath the bottom of the range there, which is 18.6, right? If we crack that, then look out below. The next target here is really coming in at this white line from in here, and that number is $16,250. Underneath that, we've got 12.4. You might be like, 12.4, that's so far away. That's a massive flush. Well, let's talk about measured move, right? If you think about this as an overall weekly bear flag, if this breaks down, it could easily travel the distance of the flagpole, which is, substantially lower. We're talking like 5,000 in Bitcoin. Those are levels we have not seen in a very, very long time, multiple years, right? So this could play out as a very nasty move to the downside if the weekly bear flag does materialize and we do start to head lower. If you're trying to be bullish inside of Bitcoin, what I would say right now is that you need to execute some patience. If this is going to be a bottoming reversal pattern, it should put in a double bottom and it needs to break the neckline for a rally higher. You can clearly see it does not look likely based on the weekly structure that's forming here and what we just saw on the daily time frame, right? So doing something like this on the daily, this is not promising whatsoever of bullish structure. We have that 100% retracement, lower high from here to here. It doesn't look good for the buyers, right? So that's what I would say about Bitcoin right now. Obviously does not look good on the upside. Downside is looking favorable. We've got the 100% retracement, so do be prepared for a lower high dead cat bounce to be put in. And then as and if we breach these lows, that's what opens the door to the downside. Again, if you want to be bullish in Bitcoin on the higher time frames, obviously it's break and acceptance over what could be a weekly double bottom neckline, 23,850, or in the short term, I will give credit where credit is due. If we see a rally that produces now a higher low above this fake out point, which is right here, 21,600, right? If we put in the higher low above that, then fine. I will give credit where credit is due, and we can flip back to the bull side, noting that we've got a low, higher low, higher low. If we can get 3 higher lows or a higher high, then we are game on back to the upside, and I will give credit where credit is due. Hopefully I've hit that home hard enough. So what is this mysterious ticker that we see on the watch list? If you know what it is, very, very cool stuff. I just sort of was looking into it recently. This is the percentage of addresses with a loss, okay? And the reason why I bring it up specifically in today's episode is because as this big route to the downside has happened, we're approaching the 50% mark. That means that 50% of addresses holding Bitcoin out there are underwater, right? We're not quite there anymore, but you can see we flirted with it on the big move to the downside. So overall, what does this mean? We can assume that there is a huge amount, exactly 50%, of people who are now overhead supply feeling losses as we come into what seems like it's going to be a pretty tough time economic-wise. Economically, geez, I feel like I should have had that word prepared better in my head, but you get the gist, right? As we come into hard times from the economy perspective, as the broad market, the S&Ps are pulling back and 50% of people are sitting on losses in their Bitcoin wallet, maybe it's, maybe we've hit that flip point where all of a sudden people are like, you know what, it is what it is. We're just going to start selling this thing. We've got to take some money out, use it to, I don't know, pay the rent, pay the gas bill, buy some food. I have no idea what's going on in people's lives. I would say a majority of people who hold Bitcoin probably don't hold a considerable amount. Like even though it says 50% of these wallets are underwater, it could be wallets that hold like fractions of a Bitcoin, right? So don't read into it as like, oh, the whales have to close. There's going to be this massive waterfall effect. I'm just pointing out from a collective group experience perspective, a lot of people are now coming into losses, and this is something that you should monitor. If we get back above the 50% mark, I don't think that bodes well, obviously, for the crypto marketplace. So enough doom and gloom. Let's move along and see what's going on in Ethereum. This was relatively strong to Bitcoin, but it's not, it is not invincible from the forces of CPI and the crash that was. So I wanted to leave the support trend line on there to clearly show you it has violated. Obviously, we will remove that now, and we have a resistance trend line in place, and we're sitting right on the lows of this range from right in here. Remember that Bitcoin is basically sitting on the lows from right in here. So it still does have some relative strength in it, but it's not out of the woods, right? So right now, I would say, if anything, there's kind of like this weekly, it's sloppy, don't get me wrong, but it is there, head and shoulders pattern that's unfolding. The main reason that I'm willing to classify it this is because the head and shoulders pattern is really just looking for a lower high and then a lower low. So as long as this neckline breaks, call it a head and shoulders, call it a descending triangle, call it whatever you want, we are getting a lower low, which is trend continuation to the downside. So your critical number right now is 1430. If 1430 breaks, we're at least traveling, I would assume, to the top of the prior range here at 1250. That's a decent short trade if the risk reward entry here is right. Lower high, again, we do have the 100% retracement. Be mindful of that. If we can put in the lower high and then break this, stop goes over here, entry, target, right? As long as the stop is reasonable and tight enough, you can pull off like a 2-to-1 risk reward, 2.5, 3-to-1 risk reward. There's a short there inside of Ethereum. I would not say there's anything to do on the long side here until the structure can change. Just like in Bitcoin, we had a fake break, fake recapture of this 1692, and obviously now we're off of that. So it would have to prove it to us with a significant higher low. And then probably, I wouldn't even say that this higher low is enough for me to get bullish in Ethereum. I would want to see a break of the resistance trend line at this point in time to flip the script back to the bull side inside of Ethereum. So really nothing to do here unless you're looking for the short breakdown of this head and shoulders neckline. If we start to put in some sort of reversal pattern here on like an hourly chart, a 30-minute chart, and you're trying to scalp this to the upside, and the same goes for Bitcoin, the same goes for really anything that we discuss here, then by all means, I'm not saying don't scalp these patterns, but for me and the time frame of this analysis, more of a swing trader's perspective, just keeping tabs on the crypto market, bears still do seem to be in control based on everything we can see currently. Next up, we've got Binance Coin. What's going on here? Another very clear, more of a descending triangle, right? The head and shoulders would have been something that looked like this. It obviously did not materialize underneath the neckline. A little bit of a fake break there, but certainly could not get out of its own way to the upside, right? Stuffing at this gray level that we have here. Technically, it's actually a lower high underneath 301.60. So overall, looking for the bears to step back in again and drive prices lower. I would, of course, want to be aware of this level this time around, 262.50. We basically came in and touched it. So again, lower highs, especially underneath 274.50 because that was the prior neckline. If this green bar turns into an inverted hammer, game on. Bears in control, flush of this low set, obviously brings you into 243.10. Continue to maintain a bearish stance here inside of Binance Coin. Really nothing going on that looks promising whatsoever to the bull side. Remember, if this is going to flip bullish, it's got to at least get to the resistance trend line, break the resistance trend line, and then put in a higher low above it, right? That's kind of the structure I would look out for there. Namely, that higher low wants to be above our 286.40 inside of Binance Coin. So those are the numbers. Those are the patterns inside of Binance Coin. Next up is Cardano. This is the coin that no one should touch. With a 20-foot pole, it continues to go sideways in a nothing burger range. If you like trading ranges, you like buying the lows, selling the highs, again, there's nothing wrong with that, but I think you're just playing with fire because the one time it doesn't work, you've got to be disciplined enough to put your stop on the other side, right? Regardless of if you're shorting the highs, looking for the rollover, or buying the lows, looking for the move higher, one of these times it's going to go through, right? Either be it to the short side, be it to the long side, it's going to go through. So I just don't think that it's worth trading. The range here is not attractive whatsoever. If the price point's what's attractive for you, then, I would say you're better off trading something with better structure, to be quite frank with you. And if you can only buy, I have no idea. This is trading around 50 cents, right? If you can only buy 500 of these and you're trading with a $1,000 account, then, you're going all in on your $1,000 account looking to pick up, I don't know, what would this be? 500 times 10 cents, maybe? You're looking to pick up 10 cents. So $50, I don't know. It's a good exercise in being disciplined, I suppose, if you're going to use that stop on either side, but just not very lucrative in terms of actually making trades here. So I would stick to the big boys in terms of what's going on. But this was such a large player. It was trending really nicely in some of these sections that I'm just waiting patiently for it to do something. I know there's that meme of, I believe it's a little alien with a stick poking something, right? And saying, do something. Come on, do something. Maybe I'll try to pop that on the screen. But you get the gist. Cardano's just, it doesn't have it going on currently. The price point is not right. Next up, we've got Solana. This is also stuck in a sideways range, but the price point's a little bit more attractive, right? So if I do something like this, you can clearly see that we're dealing with multiple dollars here. Obviously, it's a little bit more expensive to get into. You need a larger account. That's neither here nor there. But from a structural perspective, what I would point out is, we had this uptrend. We talked about that in the past, reversed it, failed to get back into quote unquote box number 2, the equivalent of what we just talked about inside of Bitcoin. Why is this box number 2? It's a little bit more sloppy, obviously, right? But you had rejection, you had support, rejection, right? We've failed to get back above our 37.43. So because of that bearish slant, yes, 100% retracement, almost dead cat bounce on the horizon. Anything that remains underneath now 32.36, obviously that's about as bearish as it gets. So dead cat here, lower high, sets up the flush underneath these lows at 30.40. Open the door, and we're going to 24.25. Anything underneath that, let's just quickly scout for a target together. Oof, this is going to be a tough one, just based on the hideousness of what was going on there. Yeah, okay, so 1925. Let's just round off, call it 1925. Let's try to draw that in as precisely as we can. 1922 it is. You get the gist. That's where we're going should a breakdown of 27.24 come and we really get going to the downside. Now, I wouldn't anticipate that will happen in the upcoming week's worth of trade. I just want you to start being prepared with some downside levels should we continue to see some downside here. So with that being said, we will continue along and, I guess we'll give you the long scenario, right? Long scenario, if this produces a higher low, then I will give credit where credit is due, and anything that does this above 34.40, that would be interesting to the upside, just for a backtest of 37.43. We wouldn't be out of the woods, but we would be at that sort of critical pivot, if you will. Last but not least, we've got MATIC. What's going on here? Why does it continue to make the cut? Because it's going sideways in this range, firmly off of its lows. And it continues to hold up in here. It's not really doing much currently. I will, say it's just bobbing around sideways in this range, so there's not a whole lot to think about here. But I just want to continue to really monitor what's going on in case one day it either does break down. This is a very obvious short trade underneath 74. All of these people turn into overhead supply. The target would be 61.14 from this prior breakout, thin structure on the way higher. So that's your obvious short trade if you're interested in shorting these types of things. Or if we go long, right, it's just clearly a break of $1 still, which we're not anywhere close to. We had this range divided into thirds roughly, this gray line and this gray line here, and we're currently hanging out in the lower third, which does strike me as a more bearish stance as opposed to bullish, obviously. So that is ultimately going to wrap up this week's episode of the Weekend Crypto Report. If you enjoyed the video, if you learned anything new, let me know down below in the comments section or by giving the video a thumbs up. And don't forget that the weekly watch list video for equities and options trading will be coming out on Sunday as regularly scheduled. Stay green, everybody. Have a great weekend.